It's in our stacking. All right. Hope you guys enjoyed your Christmas, Sha. Hope you guys enjoyed your Christmas. I did. I took a break. I took like I think I went to my parents' house, my family house per se. Um that was where I spent my Christmas. I think I went on the 24th, 24th, 25th, 26th. Today is what, 28th or so. Yeah, I just go back last night. So back to business. Okay, back to business. Um, just a little recap. We've treated basic market structure, we've treated the advanced market structure, and also I'm really impressed with some people. Some of you guys, I mean, you all are already doing wonders. Majority of you, although some are still struggling, like some are still trying to, get a hang of the whole thing. I mean, it's not complex, you understand? But I get that not everyone is a fast learner, okay? Or just like me. If doing a like a online mentorship, I mean, if I'm paying for an online mentorship and I'm doing the program, I won't really grasp that quick unless I'm with you personally one on one. That was why I paid that huge amount to Dax so he could teach me one on one physically. You understand? I want to be seeing you do it in my presence. I want to be able to ask you, okay, is this how you do this? Is this how you do it? What do you do here? You understand? That is how I learn fast. And it just took me 1 week, just 1 week. Like I've not been profitable since 2018, 19 till 2023, June, July. I wasn't profitable. But August, what was this? But August, just that 1 week um program that we had together when I went to see him, that was just all I needed. And that was when my story changed. You understand? So everyone has a different learning process. You get that's just how it is. I've seen a couple of results that I'm impressed with. It shows that you guys are actually getting the hang of the whole thing. So we'll be rounding up very soon, very soon. I want us to treat these two last classes this month before January. Maybe then we could like start another batch, but you guys will see, follow suit definitely, since it's like more like a lifetime something you get. So stacking. Now, a lot of people do not really understand the term stacking. What does it mean? It's like it means it's basically just opening multiple positions on a trade. And some people have asked me, why am I opening many positions on a trade? Why not just open like one single position or two? And the answer is simple. When you're opening multiple positions, you tend to use the lowest lot size. You tend to use the lowest lot size. So in order to prevent your trades from being closed immediately. I don't know if you understand, because whenever you're stacking with the lowest lot size and you've stacked to maybe 50% of your total margin, what happens is if the market wants to like give a little retracement, you'll be in some drawdown, and that drawdown will not affect all of your positions. It will just close like maybe let's say 20% or 30% of your positions that you opened. But if you open just a single position, just one position or two, market tend to close you out at once because you are in huge loss already. That's why you see margin call red, everything red. You have balance, equity, margin, everything is showing red. That's margin call. You get once MT5 detects that, or I don't know who is in charge of that. Once they detect it, they'll just close your trade. You understand that once. But if it is in multiple positions, if you are stacking in multiple positions, market will close some of your positions, but not all of them. Do you understand? Not all of your positions. It's just close some and leave the rest to run. Okay. And it's advisable because personally, if I want to, stack positions and I said, okay, I mean, I'm getting in a drawdown. I mean, now I'm not in a drawdown. and I need to, close some positions so that it won't affect my equity, so that my trades will not get closed faster. I will just simply close the ones that are the one that I opened late. You understand? Maybe in one position I'm down -$1, and in another position I'm down -$2. So I will close those positions and leave the one that is not in a massive drawdown. Are you guys getting? So that's the whole idea of stacking. And also, the major reason for stacking is so that you can be able to, flip your account easily. That's why you have your confirmation entry, so that you can be able to flip your account easily. Now, is this your confirmation entry that will grant you what should I use? What should I use? Hmm. It shall give you easy flipping with your confirmation. Now, let's take for instance, just look at my screen. Let's take for instance, you have your setup normally. Yeah, you have a setup normally. This is the model that we use. This is the model. And your entry is around here. You want to enter here when price takes out this structural liquidity. Imagine on a normal day, this is where your ideal stop loss would be at. Your ideal stop loss would be here, above the protected eye. This is if you are not using confirmation entry. If you are not using confirmation entry, this is where your stop loss would be, because there might be drawdown all the way here. You might see some drawdowns here, around here. The price will get here and then sell off. That's why you're setting your limit here and your stop loss above here. Then you can see that your risk reward ratio will be what? 3.52. Now imagine if this was your entry. You enter somewhere around here. Let's say price give you a confirmation here, and then this was your entry. Yeah, this was your entry. Yeah, and your stop loss is above the week that gave you a confirmation. This will be your risk reward ratio, 15.64. So imagine if you're opening one position on this trade. So imagine if you're opening just one position on this trade here, where you set your limits and your stop loss is here. Let's assume you are risking $100. This should give you what? From year to year should give you like $300 profits, like I said the last time. But if you are taking confirmation entry here and your stop loss is above the candle, above the wick of the candle that gave you that confirmation, you should be up at least $1,500 from your stacking or more. It should be more, because you are stacking now. Because if you are taking one position here with $100 capital, if you open $100 position here, the profit here will give you 1,500. Now imagine you start all the way here, open like 5 positions. 5 positions is too small. Let's say open like 10 positions, because me, I open up to like 50, 80. Imagine you open up to, if it's me that open a position here and I owe till TP, I should be up at least $5,000 from a $100 account. You get. But if you are playing it safe, you are just starting out with stacking, you don't really know how it works out here. You just say, let me try my luck. Let me open like 5 to 10 positions here. Now you can times that. That is like 1,500 times 5. What's that, guys? What would that give you? 1,500 times 5. Remember, guys, I don't know mathematics, so please help me out. That's 7,500. So you can see 7,500 with $100 account. Now, mind you, most of the time, it won't even give you, like, there will be zero drawdown once you enter the trade. Once you have a solid confirmation for that entry, for that trade, there might be zero drawdown, which means that trade is safe. The next candle that just goes down like this, the next candle that you just see here like this, boom, we just give you like, let's say like this one will just give you like $200 first. They just start falling, 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 falling. I've had a trade like that before. Zero drawdown. Do you open the same lot of the? Yes, it's all the same lot size. It's all the same lot size. Okay, the minimum, like you want to use the minimum lot size for the trade to open your positions. Okay, I mean, you guys have understood what confirmation entry is. Now, is at that close of that confirmation entry, you want to open as many positions as possible. Now, mind you, there's what we call in your MT5, we have what we call the balance, we have what we call the equity, we have what we call margin, we have what we call free margin. You get so whenever you have a balance of like let's say $100, you want to ensure that you are using the lowest lot size. Let's say the lowest lot size for V10S is 0.5. That's the lowest you can go. On V10, it's still 0.5. Yeah. So if you want to open a position on V10S, you are using 0.5, right? You're using 0.5, which means you're opening how many positions? 0.5. What that is 1, 2, 3, 4, 5. 0.5 times 5. That is 1, 2. That is 2.5 lot size. But you don't want to open that 2.5 lot size at once because it's more riskier than when you're opening it in different positions. You get because once if you open it once, the tendency of it being closed immediately is higher than when you open multiple positions. You understand, guys? So whenever you're stacking, who is this? Whenever you're stacking, please note this. This one is a very important stuff. That's why I'm being serious right now. You know, say me, I did play normally. But this stacking of a thing, yeah. Ha. If you don't get it right, it might mess your account up. It might blow up your account. Then you just say, okay, you just keep getting stopped out. Then price just goes your way. You'll be frustrated because I've been there before. Many times that's happened to me many times. So let's say, for example, now let's use a chart example instead. Let's use a chart example instead. So you get what I'm saying. Confirmation no hard now. You say the confirmation they had me. You know hard, bro. This is your confirmation. Yeah. Okay, see, just watch. Let me this the daily time frame, right? Let's do this. Price took out this liquidity. Hey, I won't be able to come this far. Ah, which recent, please someone tell me which recent pair hit TP recently. Which pair did you analyze that gave that hit TP recently? Anyone, guys, let me look at it. So I can show you V10. Okay. V10. Okay, V10, I think I gave out, right? I think I gave out the signal. Yes. This trade. Ah, God, this trade messed me up. This is what I'm saying, guys. This is a perfect example. Fuck. Fuck. Okay, now, I think I had this analysis this morning. Oh, that was not with my laptop, and it was so annoying. Now, let me show you something. Sweep of liquidity. So, guys, for those of you that are new here, that don't understand the advanced market structure, okay, this is how it is. This is how it is. First things first, we want to look at your sweep of liquidity, which is the most important thing. Your sweep of liquidity. Now, we have a sweep of liquidity here, which means an area where a previous low, a previous high that got taken out. So this was a previous low here. Market took this out, right? That means the sweep of liquidity after giving us this structural liquidity. Sorry, this transactional liquidity. Now, after a sweep of liquidity, the next break we want to see is a break to the opposite direction where the sweep of liquidity happened. Okay, so that sweep of liquidity gave us our protected low, which is this. Meaning that, okay, price is not supposed to come below here. That is the rule about a protected low. It means it is protected. It means that price is not supposed to come back there to take it out. But sometimes price might just pick it out a bit and then move to the upside. So after this transactional liquidity, this is a break of structure. We call it a transactional liquidity. We always have a correction after this transactional liquidity. This is the correction right here. Right? We have this correction. So what did that correction give us? It gave us a structural liquidity, which is this, to be taken out later. This structural liquidity must be taken out later. Remember, guys. Now, if all of this does not meet your rule, just leave that trade. One, you want to have a structural a sweep of liquidity. One, check. You want to have a transactional liquidity. Two, check. You want to have a structural liquidity. Three, check. Right? You want price to come and take out the structural liquidity. I'm sorry, I said liquidity. Liquidity. Check. Then what are you expecting again? You want price to come and tap into an area of demand or a supply. Now, where is demand here? Who can tell me where the demand is here that price came to tap into? Is it here? Is it here? Is it here? Who can tell me where the demand is? Someone tell me. Tell me where's the demand? Is it here? Hey, don't draw my this thing. Oh. Just use your mouth and say it. Edith Young. Thank you, my brother. The last candle before. Thank you. The last bearish candle before the push. I've told you guys, that is your demand level. Now, why did price, Shebi price did this? Why did price not just start selling from here? Sorry, start buying from here. Why did price not start buying from here instead? Because there was no demand level here for price to tap into. There was no demand level here. What am I doing? Sorry. No demand level here for price to tap into. So what the price do? Price went to target this extreme demand level, which is this last bearish candle here. This is your demand. You can see what price did. Price came all the way down here. Now, this is what I always say always happen. Price might give you, this was a confirmation to enter this trade. Price might give you this confirmation, right? You think it wants to go up, then it will come down, right? Then do rubbish again. You think it wants to go up again. But I don't consider this a confirmation. But this was the final confirmation. So that's why you don't want to go all in. You understand? Maybe you want to maybe you have like $100. You might just risk $50 on the first confirmation. But if you get stopped out, you might see another confirmation, which is this. Now, imagine this confirmation. There was zero drawdown on this confirmation. Imagine you have stacked your full generation net worth on this confirmation. Zero drawdown is a safe trade. Stop loss to be here below this week. Zero drawdown. Look at this. Look at the candles now. See. Price did not even weak it out. Price did not even say he wants to retrace here. Then boom. No. As she just gave you this confirmation, this bullish candlestick, after this one, after it engulfed this, you just started going boom, boom, boom. So even if you have gone full margin on this trade, you'll be in serious profit right now. You should be in serious profit. That's beauty about confirmation entry. But imagine now, look at the TP. This should give you 6.54 risk reward ratio. Now imagine if I had set my limit here, my buy limit here, my TP here. I would face all of this drawdown, and possibly get stopped out even if I put my stop loss here. Possibly get stopped out. And they feel me. Sure you get. Possibly get stopped out. Look at all this unnecessary. You go just dey panic. Like you just your heart go there do bim, 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 bim. You see price come here. You say, hey, thank God. You can't do bim, bim, bim. Price will come here. Hey, thank God. You can't go back. Bim, 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 bim. This your heart go dey race for here. Then, but just imagine say you just dey on cool. You just relax. You are waiting for your own confirmation. Once you see that confirmation, you are enter the trade. Zero drawdown, no unnecessary drawdown, no heart attack. Yeah, nothing like that. No unnecessary drawdown. Price just went pum. One hand. One hand. Sure you get. Now, it's not as easy as it might seem because this comes with a lot of emotional roller coaster. You get. That's why you need to learn about psychology, risk management. Very, very important. You understand? So for those things they don't understand confirmation, this is your confirmation entry on a demand level. You get. I took this trade, but it stopped me out here because this was the first confirmation I got. It stopped me out. It took out this week. It stopped me out. I wanted to enter again, but I did not have extra funds in my derivative, so I just didn't bother to take it because there are many opportunities in the market. You get many. So now this is where your stacking comes in. At your confirmation candle, once you see that your bullish candlestick has engulfed this candles, this doji candle or an AMA candlestick, that's where you want to stack your positions. Now, when it comes to stacking, please note, when it comes to stacking, yeah, you don't want to go full margin. I would not advise going full margin. How do you stack with a $20 account? It's simple. If I have a $20 account, most of my flips, it's on $20 accounts. You get. If I want to stack on the $20 account, I make sure I open positions till I see that my margin, you look at your margin. Like, where's my phone? Let me see. So guys, check your phones, check your MT5. Check your MT5. You see that you have oh, it's not written there unless you're in a trade. Okay, you have what we call balance, equity, free margin, right? But if you open a trade, let me open jump 100. That's the lowest distance I can. Okay, I just opened a buy on jump 100, right? Now, what am I saying? Balance, equity, margin, free margin, and margin level percent. Okay, once you have seen this, you want to, and your balance is showing $20. Okay, if you're up in profit, it will reflect in your equity. If you are in loss, it will reflect in your equity. If you're up $10, your equity will be $30, right? If you are down $10, your equity will be what? $10. But then there's what we call margin. Is that margin that we want to pay attention to? Make a screen recording when you are stacking. Don't worry, I will make a screen recording. That is not a problem. I will show it to you guys. Okay, so now is that margin we want to focus on? Please have in mind that you want to focus on margin. All right, you want to focus on margin. So if, for example, you have a $20 account, you want to start with the lowest position, lowest loss size possible. You want to open positions till your margin says how much dollar? Let's say $10. Yeah, that's 50% of your balance. Margin, not free margin. Margin. Okay, it's not free margin, it's margin. So if you have a $20 account, because if you notice, if you look at my posts, most of my this thing profits that I've posted, you notice that okay, if the balance is like $20, my margin is always like $10, $8. If I want to go full margin, you see my margin will be like $19 or $20, but that is very, very risky. The higher the margin, the higher the risk you are taking on that trade. But the higher the risk, the higher the reward. Like the trade I did that I took $30 to $1,000, right? Where is it? It's here, somewhere around here. I put it in profits. Okay, this should be it. I think on the 4th. Okay, on the 7th, on the 8th, guys. Now look at this. Guys, go to profits in the profit section. Go to profits in the profit section. Are you guys there now? Go to December 8th. I posted this thing, a $20 to $1,000 or so, something like that. Where I wrote record broken. Are you guys there now? I want to be sure that you're seeing what I'm trying to explain. Yes, okay, good. Now you can see where I did that figure to $1,029, right? Now look at the balance. The initial balance, the one on the left side, just ignore that one. The main balance, because I added more capital to it and I added more positions. Now, the balance here states that it was $39.29, right? I had $39.21 as my balance. I wanted to fund $40, but I was left with $39.21. So what happened? I opened the position. I think I opened up to like, how many position? Was it up to like 50 or so on this V25 1S trade? Then you can see the equity. Sorry, you can see the margin. The margin is 25.70, sorry, 25.57. Look at it well. 25.57. Now, this is a very risky trade that I took. Okay, but I had a confirmation to take that trade, but I took that risk. You get that was how I was able to do this figure. You understand? But the safest margin that I would have used, let's assume this is a $40 account because it was $40. I closed one position. Check the general group, guys. It's there. It's a $40 account, but I closed one position. So in loss. So that gave me 39.21. So it was a $40 account. I was supposed to use like at least $15 margin. $15 margin. You get that would have been the safest option for me. You understand? To avoid once there's drawdown, my account can still be able to, withhold. It can still be able to withhold the old drawdown and stuff. So you can see how many positions I opened. There was so much. 1,029 divided by 22. Let me see. 1,029 divided by 22. I opened 46 positions on this V25 1S. Now imagine how risky that was. If I had the slightest drawdown, this account would have been gone. Do you guys see? Because the higher your margin, the more riskier your trades will be. But though I will show you guys a screen record of how I start positions. I'm always looking at the margin. So I'm always like tapping. I'm always like, tapping it buy, 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 until I see that my margin is up to at least 30% or 40% of my total balance. So if, for example, my capital is $20, I want to stack. I want to keep pressing buy, keep pressing until I see that my margin is around $8 or $7 to play it safe, or let's say $10. Do you guys understand what I'm trying to say? I want to be, I want to take this one serious because this is where the main thing is. Because you can easily blow accounts when stacking. You get so you want to make sure you are stacking with the right positions. You don't want to use over this thing, over leveraging. You don't want to, use full margin. Because whenever you use full margin, you definitely see margin call if there's a drawdown. But if there's no drawdown, you are made already for that day. Because that profit will be crazy. Do you guys get my point? So if you have, I just blew account trying to stack. That is how it is. Now you want to ensure that your trade is valid before you even think of even stacking. You want to ensure that okay, your analysis is correct. You have a confirmation on that trade. You cannot stack without confirmation. Okay? You can't stack without confirmation. If you don't have a confirmation, don't stack. That's just the simple truth. You blow your account. So just don't stack. You want to stack when price has told you that, okay, it's time for you to stack. It's time for you to enter this trade. That is when you want to stack. Without confirmation, I won't advise stacking. So you can't stack without understanding how to, use your confirmation entries. Okay? So that's just how it is. Please ask questions if you have. This is more like a theoretical class, not really a practical class. Can we still enter this big stem buy with confirmation? Good question. Now, please note that whenever price has left your confirmation entry, forget about that trade. Honestly, that's just the simple truth. Forget about that trade. Now, this V10 is still ranging within the confirmation. It's still ranging within that confirmation. If it gets back to that confirmation entry, you can still enter, right? But you want to ensure that it gets back to exactly that confirmation entry. Yes, you must always use the lowest lot to stack. If you are using big lot size, you can't stack using big lot size. I remember when I tried when I wanted to stack on V75, I went to use the wrong lot size to stack, and I was going to risk how much for that trade? $200 for that trade, because my target was I think my target was I think $3,000. I was going to make $3,000 on that trade. So what happened was that I used the wrong lot size. Instead of 0.005, I used 0.05. So I was not like, what was going on? Why is my account in minus $150 already? You get, because all my mind was that I supposed to be at least, even if I'm in a loss, at least $20 max. So you get, so the trade, everything stopped me. Like all my capital was gone, 200 gone. And the next I knew, I knew, boom, market went to my direction. I was so pissed. I was so frustrated because I was like, if I had actually used the right lot size, I would have been in massive profits. You get. So it was so painful. You understand? Because now you tend to be in drawdown faster. Another reason why I say stacking with the lowest lot size is this. If, for example, look at my screen. If, for example, price has given you a confirmation here. Price has given you a confirmation here. Now, and price is doing something like this. And price is doing something like this. Price did not just go once, boom. What did price do? Price was still falling down small like this. Now, that is how I start. I want to, I want to be entering as the market is still giving me, after this confirmation, maybe price is giving me a small retracement, like a weak rejection. Yeah, maybe price is coming down, a weak all to this place here. I want to stack all this way. Then before you know, boom, market will just go to the upside. You're in profits. But imagine you had opened all of your positions here, all of your big lot size positions here. Then market did this. Once market gets here, market will stop you out. That's a stacking for you. It's risky, but it pays. That's a stacking for you. Okay, so if I'm seeing if I see my confirmation and I'm seeing small drawdown, maybe price is just creating a week here to continue. I'm taking buy, yeah, buy. Then before you know, market will recover and go up. You get, so these are the little things we want to put into consideration. We just don't want to, choke head anyhow. After a confirmation candle, should we wait for the next candle to close before we start? After this, your confirmation candle, this is where you want to start. Once price has closed above here on the 5 minutes time frame, this is where you want to start. And please note, it's always on the 5 minutes time frame. Always on the 5 minutes time frame you want to start. Don't go and start on the 15 minutes time frame. Don't say you see a confirmation on the 15 minutes time frame and you go there to start. No. And please don't start on the 3 minutes time frame. Don't start on the 2 minutes time frame. Don't start on the 1 minute time frame. Is there any exact amount of positions to open depending on you? Any amount? No, listen, see, focus on your margin. Always note that your margin should be at least 30% of your total capital. So if you are stacking, if you have a $10 capital, you want to stack to your margin says $3 or $4. Okay? The remaining margin that is left, the remaining money left is to accommodate your drawdown. You understand? Is to accommodate your drawdown. So please don't how do I say this? Don't overstack. All right? Please don't overstack. It will help you. But should we take the trade whenever we see the setup, or we should go with the trend? Because I noticed you open your chances. Thank you. Most of the time, yeah, I don't do top down analysis. Most of the time, I might just go to any chart now. Wait, let me see how I trade basically. V10s. Our time is almost up. Okay, V25s. Okay, I just opened V25s on the 5 minutes time frame. Right? This is how I trade. This is how I trade, guys. On the 5 minutes time frame. Boom. 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 This is just how I trade. This is how I trade. Then what? Put my short too. Boom. Boom. Then what? Send signal. That's it. This guy, this is how I trade. Forget, see, I don't really do top-down analysis, but when there's need for it, I will do it. This is just how I trade, basically. This is it. V25 1S sell. You can put your entry if you like. If you want, you can set your this thing. Look for a supply level here. Take an entry. That's it. That's just it. I swear with my life. Even like film. See, once you are able to see it, you can never unsee it. I swear. So guys, this is it. I've not done, I didn't even bother myself coming to come and check top down analysis after. I just came and I did this and that was it. So guys, our time is up. We'll definitely have another session again this week. Okay. Personal. We go do psychology, don't worry. Later, guys. Juju, pure juju. I don't go with Babalawo.